What if I told you that understanding just a few key metrics could completely change the way you look at real estate? Today, I'm going to break down a detailed real estate market analysis, revealing the secrets behind those numbers and trends that you see in market reports. By the end of this video, you'll not only know what to look for, but also how to interpret these insights to make smarter, more profitable decisions. Plus, I'm going to share some exclusive tips that I've never discussed online before, insights that have significantly impacted my personal and clients' investment success. Let's dive in and decode the real estate market together. Conducting a market analysis is fundamental to gaining a better understanding of real estate and how to evaluate different markets. The ideas and metrics we look at will be transferable to any real estate market. But before we get started, smash that subscribe and like button if you want to up your real estate game and help this channel produce more educational real estate videos. To do a proper market analysis, you need to have good data. You can get this data by searching for TREB Market Watch. It should be one of the first links in your results. This report is provided to the public monthly at the start of each month, so you can easily access this data. You can also view past market reports dating back to January 1996. If you're serious about researching your market, I suggest documenting all this data onto a spreadsheet or asking your agent to send it to you in an Excel file. If your agent doesn't know how to do this, you can request specific data through the link in my description below, and one of my team members will send this information to you. Here are a few things to keep in mind. When it comes to data, remember the larger the data set, the better the results will be. For example, analyzing a small community like Freehold in Kensington, Chinatown in downtown won't give you much insight due to the limited amount of data points. As a rule of thumb, don't filter down to the community level, and for sparsely populated areas, avoid filtering down to the municipality and stick with the area boundaries. Another thing to keep in mind is that properties that sold in the previous month but haven't been reported because they are sold with conditions might cause changes in the sales numbers as they get reported. Additionally, there's a delay in updating the database versus the market report. You'll get the market report first, then the data will be updated a day or so later. Now let's set the stage. To understand what we're trying to interpret and achieve, you need to first understand the definition of a real estate market. The real estate market is the economic sector encompassing all activities related to buying, selling, and leasing properties. It includes sectors like residential, commercial, industrial, and agricultural real estate. The market's performance is influenced by factors such as interest rates, the economy, demographics, and government policies. It's a complex web of relationships shaping the real estate market. Understanding these interactions is crucial for making informed decisions. While we won't delve into these details in this video, we will definitely explore these factors in future videos. Ultimately, the purpose of doing a market analysis is to understand what is happening with the real estate market in relation to prices and trends in the short term. I personally use it to predict future short-term market conditions and make strategic pricing decisions. To truly understand this, you must understand how real estate prices are set, which involves basic economics, supply and demand. If you've taken any basic economics course, you'll understand this concept. If not, watch something on YouTube to get familiar with it because it's fundamental to understand price. The supply side of real estate market consists of active listings and future inventory from new constructions. In our analysis, we will ignore the new construction side and just focus on the active listings. We know this information because we have an MLS system where all properties are listed. The demand side consists of the number of active buyers. Since it's difficult to determine the exact number of active buyers at any given time, we rely on sales data as an indicator of demand. Keep in mind that this is a lagging indicator because it's based on past metrics, not real-time data. One way agents can get a more real-time metric on demand is by tracking the number of showings booked on their listings. This isn't public information, but it's probably the most accurate metric on the demand side. We can literally feel when the market is shifting by the number of appointments set on our listings. Where the supply and demand graphs intersect is the price. This is an oversimplified explanation to help you understand how this works, but there are many other factors at play that I won't cover in this video, like human behavior, psychology, product finishes, presentation, and more. All you really need to understand for now is that when there is a lot of listings for sale, like a high supply, and a few buyers, low demand, prices tend to go down. Conversely, when supply is low and demand is high, prices will go up. So let's take a look at how the GTA real estate market is doing. We'll start with the Market Watch report provided by our real estate board. I'll start by looking at this table here. This table breaks down unit sales and average prices, showing the year-over-year change. It breaks down freehold into detached, semi-detached, and townhouse types, and only shows condo apartments, excluding condo townhouses, and distinguishes between the City of Toronto 416 and the rest of the GTA 905. Based on the data, there's been a drop of sales, 19.4% for detached, 21.3% for semis, 24.3% for townhouses, and 24.1% for condos. Prices have decreased by 3.2% for detached, 2% for semis, 5.6% for townhouses, and 2.4% for condos. In this table, you will see the entire real estate board's sales activity. There were significantly fewer sales in May 2024 compared to May 2023, a drop of 21.7%, and a huge increase in active listings, up 83.3%. However, there's only been a slight drop in average prices of about $30,000 or 2.5%, with higher listed days on market and actual days on market. Unless you've been following this data from the past, you can't really get that much information from this data because it doesn't really give us a full context of what's really going on because you don't actually know the full picture. For example, last year could have been a phenomenal record-breaking year, so this year could be just a temporary setback. This report shows you the year-over-year change, but the information you can get from this is limited without additional context. This is where the additional data comes in and where I have to do additional work to get this information that we're looking for. I will touch on this at the end of the video, but for now, I'll introduce you to some of the basics by going through the rest of this report and show you what information and insights you can get out of this, as the mainstream media and the majority of real estate professionals will use these reports for their own reporting. This next page shows you all the sales by price range and house type. The majority of the sales in GTA are freeholds, with condos making up 35.6%. You can also see the average prices of the different types of housing. No surprise that detached are more expensive, with condos being the more affordable. The top table shows activity for May, and the bottom table shows the year to date for 2024. This next table shows useful common metrics tracked for the real estate industry for each area and municipality. I'll clarify what each metric means and the information you can get from it. The first column are the different Toronto Regional Real Estate Board's areas. The top row combines all of the areas below. The next column is a number of sales or properties units sold in each area. We already touched that sales are a good proxy for the demand side of the market equation. We had a total of 7,013 sales in May 2024 across the entire real estate board. The dollar volume is a total dollar value of all properties sold. In May 2024, this was over $8 billion. The average price is simply the dollar volume divided by the sales. This is probably the most common used metric when people talk about real estate prices. However, averages are prone to outliers, which can make the information inaccurate. The median price is the exact middle number of a data set when ordered from least to greatest. I personally like this price metric the most because it is less affected by outliers, offering a more accurate representation of typical property prices. New listings refer to the number of properties that came onto the market within a specific period. This metric is crucial for analyzing the flow of new supply entering the market, helping to gauge the availability of properties for potential buyers. The SNLR stands for the sales to new listings ratio. The trend part is referring to the use of a 12-month moving average to smooth out fluctuations. It's calculated by dividing the number of sales by the number of new listings, indicating how many sales are happening compared to new listings entering the market. A lower SNLR suggests a buyer market, while a higher SNLR indicates a seller's market. For instance, in February 2022, during the peak of the last market cycle, the SNLR was at 72%. Currently, it stands at 41.6%. Active listings refer to the number of properties currently for sale. This metric represents the supply side of the market, indicating the availability of properties that potential buyers can choose from. Months of inventory trend. The months of inventory refers to the amount of time it would take to sell all active listings at the current sales pace. It's calculated by dividing the number of active listings by the number of sales from the previous month. Again, the trend part is referring to the use of a 12-month moving average. A higher number indicates a buyer's market, while a lower number suggests a seller's market. Average sales price list price ratio is calculated by dividing the sold price by the listing price, or asking price. A higher ratio indicates a hotter market, often characterized by bidding wars that pushes prices above the listing price. Conversely, a lower ratio suggests a cooler market. Agents can cancel and relist properties, so the real estate board has divided the days on market, DOM, metric into two categories: average listing days on market and average property days on market. The listing days on market refers specifically to the days on market for the current listing. Property days on market represents the total actual days the property has been on the market, regardless of relistings, providing a more accurate and realistic measure of market conditions. Higher days on market indicates worse market conditions, as it takes more time to sell the property. Now that we understand what all these metrics mean, here's a pro tip on how to use this data to determine the hottest area in the market right now. Can you figure it out? Don't worry if you can't, I'll tell you. Look for the highest sales price to list price ratio and the lowest days on market to identify the hottest markets. For example, the Toronto East might be the winner with a 107% ratio and 20 days on market. Oshawa is also quite hot with a 106% ratio and 19 days on market. Conversely, Uxbridge appears to be the slowest market with a 97% ratio and 51 days on market. However, keep in mind that Uxbridge only has a sample size of 22 sales, which isn't a lot of data. Remember what I said about sample size earlier? Now that you know this, if you actually go back and look at the historical numbers, you can see which area has consistently been the hottest in the GTA and Toronto. I actually discovered this technique 15 years ago when I first arrived here, and I've been using it to invest in that area along with my clients. I'll let you figure this one out. Put your answer in the comment below if you think you know. This next page provides a detailed breakdown of the City of Toronto area. Starting from page 5, you'll see the areas broken down by home types. The breakdown includes all home types: detached, semi-detached, attached row towns, condo apartments, link, co-ops, detached condos, and co-ownership apartments. There's very little data and few properties for the last three types, so I'm not sure why they even show this data because it's mostly irrelevant. I never actually look at this data, so you can ignore it unless you own one of these property types. This page covers the home price index, which I honestly don't care for. If you've watched my past market reports, you know what I'm talking about. This data has changed on me 3 times in the past 2 years, so I don't have any confidence in this metric. Although I track it, I generally ignore it. They just recently changed it again this month, which is extremely annoying because I have to go back and change all my numbers manually since they don't provide an Excel copy. Instead, just use the average or even better, the median price. I don't trust data that changes 3 times in 2 years. If you know why this happens, I would really appreciate it if you could drop it in the comments below. And that brings us to the end of the report with some yearly stats. You can see that 2023 was the slowest year we've had since 2011, with just over 65,000 sales, and 2022 was the second worst with just over 75,000 sales. I predict that 2024 will be even worse, as historically the majority of sales happened during the first half of the year, and we're already at below 2023 numbers. 30,416 for 2024 versus 31,151 for 2023. Now that you understand the different metrics and how to navigate the TREB market report, I can show you an example of what you can do with historic data to gain more context on the numbers from this report. If you wish to get this data, request it at the link below and someone from my team will help you. If you've watched my previous video from last week, you'll know the results of the market report. I encourage you to watch this video to gain more insights on how to analyze the data. It will make a lot more sense of why I'm doing what I'm doing next. Once I've downloaded the data I'm looking for, I clean it up by adding the information I want and removing what I don't need. This allows me to manipulate and analyze the data more effectively. I just use Google Sheets because it's online and it's pretty much the same as Excel now, but you can do this in Excel if you prefer. First, I copy and paste the data I want. Then I divide the month and year for the date using a formula. You'll see why I do this later. Now that I have my data organized, let's do something with it. Let's say you want to see all the sales numbers for the month of May over each year. I'll just use this space beside the raw data and then use a formula to pull all this data from my source data to organize it. Now that I have this data organized, let's create a graph to visualize it and understand what's going on. If we want to see the historical sales for the past 37 years, we select the two columns, date and sales, click on the graph button to generate the graph. You can clean up this graph a bit, but I won't get into those details right now. However, you'll find you can get much more insight from the data once you visualize it. You can also do this for other metrics as well, like dollar volume or average price. Once you've played with the data to get the answers you're looking for and cleaned up the graphs the way you want, you can go back into the TREB market report and compare it with your organized data. I've already done this for you. So when you look at the big picture, you'll realize that the sales numbers are much worse than just a 21.7% drop as indicated in the market report. The graph shows that the sales numbers are among the lowest in recent years. With the exception of the COVID lockdowns in 2020, which was an anomaly forced by the government rather than market forces, May 2024 has the lowest sales since 2001, over 20 years ago. Now, consider the population growth, which has increased by approximately 1.7 million people over the past 23 years. This suggests a significant drop in demand. Compared to the previous 10-year average, we're down 26.96%. This clearly indicates that the high interest rates are negatively affecting the housing market. You can see this trend starting in March 2022 when rates began to hike. Next, let's look at the new listings, which are reported to being up by 21.1% in the TREB market report. When we examine the graph, historically speaking, it's not that different from previous Mays. The significant percentage increase is primarily because last year's new listings were lower than historical values. When comparing it to the 10-year average, new listings are up only by 2.16%, which isn't as significant as the 21.1% increase shown in the TREB market report. So it doesn't seem like we are seeing any panic selling. The numbers are normal compared to previous May months. If you just look at the 21.1% increase, you might assume that sellers were panic selling, but they clearly aren't. Let's take a look at the active listings, which are reported to be up 83.3% year over year, according to the TREB market report. When we examine the graph, you can see a significant jump from the previous 4 years. However, it hasn't reached the peak level of 2013, so we haven't broken this threshold yet. Although the supply is high, we must consider that the population has grown since then. Given the significant drop in demand and the fact that the flow of new listings is similar to previous years, the probability of active listings continuing to increase is very high. When compared to the 10-year average, active listings are up by 34.26%, which is substantial but not as extreme as the 83.3% increase shown in the market report. Now that we have the supply and demand data, we can see what's going on with the prices. The TREB market report shows an average price drop of only 2.5%. When we look at the graph, we can see a minor price adjustment from the peak of the market, and the trend appears to be going downwards. This isn't a surprise given the increase in supply and the drop in demand. However, when compared to the 10-year average, prices are actually up by 31.52%, indicating that prices are still high compared to historic levels. From the peak of the market in February 2022, prices overall are down by only 12.62%, which isn't actually that significant. For context, we saw the GTA average prices soar by 27.7% in February of 2022. This demonstrates the resilience of the GTA real estate market. Despite 10 interest rate hikes and maintaining high interest rates for about a year and a half, prices haven't fallen as much as one might expect, given the significantly increased cost of housing. This may be due to financial safety measures like the stress test and the fact that majority of properties were sold before prices really surged. Additionally, many homeowners don't actually have mortgages. So you can't just paint every homeowner with the same brush and expect everyone to be affected by high interest rates. While many people are impacted, it's not everyone. Only once you analyze all this additional information and data will you have a more accurate measure of how the market is going to be affected. I don't have the resources to do this analysis, but it would be interesting to know why the GTA home prices are so resilient. The final metric we will look at is the listing days on market. The market report shows that it has increased by 35.7%. When you look at the graph, you can see that this is still relatively low historically speaking. I attribute this to the fact that it was much more difficult to cancel a listing and relist a property in the past, as it was all done manually. Nowadays, with digital signing tools, this process has become very easy. So comparing recent data with past data may not be entirely accurate. However, we can definitely conclude that properties are taking longer to sell. While this metric isn't entirely accurate, it's better to look at the property days on market, as we mentioned before. But unfortunately, obtaining this data conveniently is not possible. So now that you have the big picture, you can draw a more accurate conclusion about what's really going on in the real estate market. Based on the data, the demand side, which we gauge from sales, is down significantly. We aren't at the COVID lows, but we are at very low historical numbers despite having a growing population, which is concerning. The flow of new supply coming onto the market, new listings, hasn't changed much from historical numbers, indicating we aren't seeing panic selling on the resale front. However, the current supply of active listings on the market is becoming burdensome. We haven't hit the all-time historical high yet, but I can see it surpassing this level. The absorption rate, which measures how quickly buyers are purchasing the existing inventory, is much lower than in historical years, while the flow of new listings remains constant with historical numbers. This means that there will be an excess of supply adding to the active listings numbers if this trend continues. This will negatively impact prices, as we are already seeing average prices coming down. This trend will continue until either the buyer demand goes up or the active listing supplies goes down. Buyer demand could increase if interest rates come down, improving affordability. Active listings can decrease if sellers take their properties off the market, which typically happens in August and December. I will be watching this very closely. If you made it this far, you should now have the basic fundamentals of how to analyze real estate market data, identify trends, and make more informed real estate decisions. If you found this video helpful, share it with someone who will find this information useful. Please smash that like button and subscribe to our channel for more educational content on real estate. Don't forget to check out the links in the description for access to the TREB market reports and other valuable resources. And as always, if you need specific data or have any questions, feel free to reach out through the request data link below, and my team will be more than happy to assist you. Stay tuned for our upcoming videos where we'll dive deeper into the factors influencing the real estate market and provide you with even more actionable tips to enhance your real estate strategy. Actually, this video right here can help you along that real estate journey. Until next time, I'll see you in the next video.